Hello, everyone, and welcome to Moementum Mondays. On these weekly series, every Monday, we invite one inspiring young man or woman to our show and talk to them about important topics, including investing, financial planning, and financial education. Many of our guests include fellow YouTubers and investors who I've followed on YouTube and enjoyed their contents. Without any further ado, let's get into it. Well, hey there, Matt. Welcome to the show.
Yeah, thank you for inviting me. I'm really excited to go into this conversation.
Lovely. Yeah, I'm so glad that you actually accepted my invite to join the show. So my very first question for you is, can you introduce yourself to the audience of the show, please?
Yeah, so my name is Matt Welter. I actually run a YouTube channel similar to Mo here about finance, investing, personal finance, anything around those type of topics. I actually am currently a college student. I'm a finance major. So I kind of started the YouTube channel a little bit because of that different background I had with finance. And I love traveling. I love sports. I'm a huge Seattle sports fan. And I'm a big proponent of being well-rounded. So I talk about finance and investing on my channel, but I mean, I also like a lot of different things. I like reading different books that aren't necessarily finance all the time. So yeah, that's a little bit about myself.
I actually do follow Matt's channel on YouTube. Love your content, and you talk a little bit about yourself in your content as well, being a college student. What's your ambition for the channel? Can you tell me a little bit more about your channel? When did you start? How long ago did you started it? And perhaps what kind of triggered you and gave you the momentum to start the channel in the first place?
Yeah, so I actually started my channel back in May 2020, I believe. And actually, before I actually started my channel, I had kind of been like, I always, probably a long time before that, I started watching like people like Graham Stephan, Nate O'Brien, and some of them kind of gave me the inspiration, I guess, to actually go ahead and start something myself. I've always been into like personal finance and investing. So just kind of those topics, then watching other YouTubers being able to do it, especially Nate and people like that who were on the younger side that were able to actually go and talk about personal finance and investing. Because I guess a little bit of the reason I took so long to start is a little bit of intimidation, just because I didn't know if people would take me seriously, just because I am relatively young talking about a topic like investing that usually more seasoned people would talk about, I guess. So I started it back in May 2020, and I had that going for about a month and a half. And then I had a little bit of a combination of getting a little burnt out because I was trying really hard and I was looking a lot at the end results, and obviously not a lot of end results would come in, because when you start on YouTube, it's kind of like starting a business. Like, it's a lot of delayed gratification. You don't see a lot of results at first. So I was getting a little burnt out. And then I was also getting close to going back to college, and I just didn't know how I was going to be able to balance all of it. So I kind of put a pause on my channel. But then around in November, when I was in college in the fall, I actually decided, I'm not going to make any more excuses. I'm just going to go for it and see what happens. So I restarted my channel back in November, and I've been making content ever since, and hopefully will continue doing that.
Can you tell us also a little bit about your investing? Are you investing in the stock market currently, Matt? And how long perhaps have you been investing so far?
Yeah, so I am invested in the stock market right now. I have a long-term portfolio with Schwab, which is where I have some of my long-term investments, companies I believe in long-term. And then I have a much smaller, more speculative portfolio that I have in Robinhood that I use for more risky, more speculative plays. So I started investing in the stock market, I believe, like my senior year of high school, so about like 3 years ago. But to be honest, when I first started investing, I kind of would just like buy into companies and kind of hope they would go up. But then I would do a lot of like things like buying and selling like on a week-to-week basis. Like I was kind of just very a beginner with it. Like I would think I would know what I was doing, but I really had literally no idea what I was doing. I wouldn't even really research fundamentals behind a company. I would just like look at a company and be like, oh, I think they might do well, and then I would invest in them. But I definitely learned the hard way along the way. Like I definitely lost some money when I first started doing that. And now I'm a lot different with my investing strategies as far as, investing in companies I believe in long-term, doing lots of research before I invest in a company, things like that. So.
That's good. You talked a little bit about that learnings along the way, and since you started 3 years ago compared to now, it seems that you feel like you're a lot more mature in terms of the knowledge of investing and how to go about researching companies. Can you share some of your key lessons along the way over the past several years that you've been investing in the stock market? What are those? If you were to share some of the key lessons, what would those be?
Yeah, for sure. So I would say one key lesson, and it's part of the reason why I have two separate investing portfolios, is that you really got to know the difference between investing and speculation, because a lot of people nowadays, especially with how much in recent times that the market has just been continually going up. A lot of people kind of have been just thinking that, you know, the market never goes down, which is obviously not a right mindset to have. And a lot of people have been going in and speculating, being like, oh, this company, you know, sounds good, so investing in it. But there's a huge difference between actually investing in a company and speculating into a company. That's the reason why I have a separate portfolio that I use if I'm going to make a little bit more of a speculative investment, whether that be into a company that doesn't have, you know, a strong necessarily balance sheet, or they don't have a strong set of past revenues, or just something that you're expecting that might happen in the future, but there isn't necessarily the fundamentals to support it. There's not past performance to support it. Whereas investing, in my opinion, is actually going into companies that track a certain checklist as far as like have a strong balance sheet, are trading at a decent valuation, have a good long-term prospects, things like that. So I would say knowing the difference between investing and speculation is definitely one lesson that I've learned the hard way personally, and I definitely think people should understand. I would say number two, kind of going off that, is not buying into the hype of the market. Right now, there's a lot of hype surrounding a lot of different companies. Like if you look at EVs or like certain industries that are just like going crazy, and like a lot of people, especially beginner investors, will go into the mindset thinking like, oh, since these companies have just been going up so much, like they're just going to keep going up, and without any other basis other than the fact that it's been going up, so it must keep going up. And sometimes buying into hype companies can really get you burned, because when it does finally come back to rationality, it can really cause stocks to just absolutely plummet. The third lesson would be that markets are irrational, because there's times where, you know, companies, let's say, are trading at a low valuation or they're trading at a high valuation. When they're trading at a high valuation, they're irrationally high. Investors are overly optimistic that this company is going to keep going on the basis of nothing or no fundamentals to support it. Or when companies crash and then everyone's selling, then that's usually what happens, is that there's some sort of overreaction to some sort of news that maybe isn't going to affect the company long term, but their investors become overly pessimistic, and that's what creates buying opportunities for value investors such as myself. So
you touched on a little bit on that you referred calling yourself towards the end a value investor. Is that the type of investor that you consider yourself?
Yeah, I would definitely consider myself a value investor. I read through The Intelligent Investor. I definitely side with a lot of the mindset of Warren Buffett, for example. I definitely think that it takes a lot of risk out of investing when you are a value investor, because then you're not buying into a company just because it's a great company that's keep going up, but you're buying into a company that is a great company and it's trading at some sort of a good valuation. You can pick it up with a decent margin of safety. And it kind of just takes a lot of risk out of investing, which I like not having as much risk. So.
In terms of the kind of proportion of your investment, if I may ask, say what portion of your investments have you decided to put on the more long-term value investment portfolio, and what proportion of that have you put perhaps in the more speculative stocks?
Yeah, I always try to make sure that my speculative portfolio is no more than like 5 to 10% at the absolute most of my overall investing portfolio. And then obviously the most amount of my capital is going to be devoted towards my long-term portfolio into companies that I'm going to buy and hold for, 5 to 10 years or even longer, depending on what I see in the company. Whereas a lot of times with the speculative positions, sometimes it'll be like long-term, that I'm looking into a company that I think in a couple of years is going to be big or something, or sometimes it'll be sort of a short-term play that I'm playing, but I always make sure that I never exceed 10% at the absolute most. And usually I keep it around 5% of my overall investing portfolio. So.
And that's very good, because you have set that threshold for yourself and you're trying to kind of rebalance your portfolio as time goes by and kind of stick to it. That's really good. For me, one of the pieces that I've kind of reflected on, and I think something that in this year I want to get better at, is the number of holdings that I have in my portfolio. I do have, I must admit, I do have arguably a lot of different companies in my investment portfolio. And one thing I've noticed, it really makes it hard for me to be able to do proper research and be able to really stay on top of those companies. What's the latest and greatest with them? How, to your point, how their balance sheet looks like now, how they're making, how's their revenue growth over time? What is the overall market like for this company, the projections for the future? One thing that I'm going to perhaps take a slightly different approach this year is to trim some of those companies and kind of maintain the ones that I want to hold on for the longer term. I do have a subset of more of a speculative stock similar to you, but I think for those, as you indicated, perhaps you're going to take the risk longer term. You're already going to be accepting the risk for those companies. How about yourself? Do you have a lot of different stocks in your portfolio? What is that maximum perhaps number of companies that you think it would be a reasonable number to have in your stock portfolio?
Yeah, I think it definitely depends on the amount of capital that you have to begin with. Obviously, Warren Buffett, like working with billions and billions of dollars, like he has a lot of companies within his portfolio, but he also has gone on and said that diversification is for idiots, as far as like you don't want to have too much diversification because then it gets out the actually huge winners within your portfolio. So I would say, again, it depends on the capital you have, but for the vast majority of investors, I would say probably 8 to 12 companies within their portfolio is a good solid number to have. As far as, let's say that you have 6 companies that you're super solid on, like these are your investments that have been doing the best for you, you believe in them most long term, and then you have an additional, like, I don't know, 8 that you also think are going to have strong long-term prospects but maybe haven't done as well for you. You don't think as highly of them as the other ones. Well, why would you not invest more capital and as much capital as possible into the ones that you believe in the absolute most? And at that point, I think I would leave it at least for me personally, probably 8 to 10 companies that I just believed in the absolute most. And I wouldn't invest in a couple more companies on the side when I could use that money to invest in the companies I believe in the most within my long-term portfolio.
And is that how the kind of the motto and the approach that you've taken right now in your investing? Have you tried to limit the number of stocks in your portfolio to the maximum, let's say 8 to 12, as you indicated?
Yeah, so far right now in my long-term portfolio, I believe I have 6 to 7 companies that are in that. Sometimes in my speculative one, I go a little bit more just depending on what I'm working with. But as far as my long-term portfolio, that is my most amount of capital and I believe in the most, I usually try to stick with 8 to 12. And right now I have about 6 companies, I believe. So.
Awesome. What's your stake on the exchange traded funds or index funds? Do you have those in your stock investment portfolio? What are your thoughts on those?
Right now, I actually do not have any ETFs or index funds in my portfolio, either of my portfolios. I do think that for a lot of investors, and probably the vast majority of investors, sticking with index funds and ETFs can definitely be the way to go if you're not willing to put in, the hours of research it takes to research before you invest into a company, to read financial reports, things like that. And that's kind of the difference between actively and passively investing. But I would say that ETFs and index funds for the vast majority of people works well. However, if you are willing to put in the work to actively invest via doing lots of research, reading financial reports, then I think that you could be rewarded even more with individual stocks than you could be through ETFs and index funds. So.
I agree with you, Matthew. I think similar to what you said, for many investors, especially those who are just brand new to investing, perhaps starting with investing in passively through an exchange traded fund, ETF, or an index fund would be the way to go. Not only it is a lot more diversified, but also you're not necessarily picking stocks without having the full knowledge of what company you're actually truly buying into, and is it really the right company to buy. It's not just about knowing a company or having heard about the company, but also knowing the fundamentals of it. Speaking of fundamentals, do you consider yourself more of interested in analyzing the stocks based on fundamentals or also technical? I don't consider myself much of a technical analyst when it comes to stocks. I dabble a little bit in it and kind of get fascinated by what the numbers are telling us based on technical analysis, but I do consider myself more of a fundamental analyst when it comes to stocks. How about yourself?
Yeah, I would absolutely consider myself also based on fundamentals. I invest. Probably the number one thing I look at besides the long-term prospects of a certain company is their valuation. Mm-hmm. So if I can pair a company that has solid long-term prospects with an attractive valuation, those are the two most telling signs for me on whether I invest in a company. And obviously, I take a deeper look into their financials, such as their balance sheet and things that are coming in with their revenue. However, to be honest, I don't really do too much with technical because I'm a long-term investor as well. So like if I'm going to invest in a company for 5 years, whether I buy into it now or in a couple of weeks probably isn't going to make too much of a difference. So for me, at least, I'm definitely a fundamental-based investor.
True. And I mean, with valuation, perhaps you're already taking some of those pieces into account as well, because based on valuation, you're deciding whether is that perhaps right now at the price that this company and its stock is offered to you, is that perhaps the right entry point quote unquote. Wonderful. What stocks or perhaps sectors, if you're comfortable talking about those, are perhaps the most exciting ones for you in this year is going to be really the year for them?
I would say renewable energy for me. So I actually just filmed a video. It actually is about an ETF, but it's about the TAN ETF, which takes into account a lot of different solar companies. And actually the largest holding within my investment portfolio for long term right now is a solar company. So I personally believe a lot in renewable energy, especially with the shift away from fossil fuels and towards different renewable energy sources. And I've taken a deep dive look into renewable energy sources specifically, and out of all the renewable energy sources, it seems like solar is really supposed to grow the most, at least in my opinion. And that's kind of how I pick investments sometimes too, is I'll take a look at an industry I really like, and then from that industry, I'll take a look at the individual stocks within the industry, and then I'll pick the best stock within the industry that I already like. So since I already really like solar, I took a look at a bunch of different solar companies, found the one with the best valuation and best fundamentals in my opinion, and invested in it. So I really think renewable energy, the renewable energy sector is going to do really well in the coming years.
If our viewers were to find your YouTube channel, Matthew, how can they find it? What should they do? Where should they go?
I have an Instagram as well. Matt Welter 5 is my Instagram, but my channel on YouTube is just my name, Matt Welter. So if you just search Matt Welter on YouTube, you can find it. I talk about a lot of things similar to Mo. So if you like Mo's content, you hopefully would probably like mine as well. But I talk about investing, personal finance. I also like talking about some other things such as, success, motivation, productivity, things like that. So.
Awesome. And we'll be sure to leave a link in the description of the video to Matt's YouTube channel. So be sure to check it out and go there and support Matt on his journey and YouTube channel. So what advice would you give to young investors or young people who are new to investing and financial planning? What would be your best advice to them?
I would say make sure you educate yourself before you get into investing. I kind of made the mistake of I kind of just saw that some of my friends were doing it and just kind of jumped into it and didn't really have any sort of financial literacy with investing before I started doing it. So whether that be, there's lots of books out there that can educate you on investing, personal finance, things like that. So whether that would be like reading a book, watching YouTube videos, just reading articles online, do anything you can to gain some financial literacy before you start investing, because you don't want to lose a lot of money. And there's also some sites out there too, where you can even, if you wanted to, before you invested with real money, you can invest with fake money. So you can educate yourself, test yourself before you actually put real money on the line. And I would say that definitely is going to save you a lot of heartache and probably money too. So.
What is your favorite finance investing book? Earlier on, you talked about The Intelligent Investor, but we'd love to know what is your favorite book, and can you tell us also why?
Yeah, so I would say my favorite investing book is The Intelligent Investor, how I mentioned earlier. And for that, it's basically because a lot of the strategies they talk about within the book are similar ones that I employ as an investor, as far as investing with a margin of safety, value investing, how to find companies that are out of favor with investors that maybe you can jump into them with a good valuation. Talks about how markets are irrational, and how you just have to be able to act rationally with markets. If it's giving you a good deal, that's when you take it, things like that. But I also, personal finance wise, I really like Rich Dad Poor Dad. It kind of just exhibits all the different ways that, as a poor person or a rich person, usually someone that's rich doesn't necessarily walk around with really nice watches, really nice clothes all the time, things like that. They just understand what assets are, how to invest in assets, and they also understand liabilities and not to get themselves stuck up on a bunch of debt. They understand living below their means, and I think a lot of that's really crucial towards people who want to pursue financial freedom.
Those were all the questions that I had for this talk with you, Matt. Is there anything else that you would like to share with me or our viewers for this episode?
Not too much else. Mo's a great guy, makes great videos, so make sure you guys continue following along. I definitely enjoy watching his videos. So I guess just if you're looking to invest in the stock market, final piece of advice, just make sure you educate yourself. Simple as that.
Totally. And it's so important. Yeah, you're definitely absolutely right. Educating yourself. And there's a ton of content out there for free. YouTube, different websites, the books that you said. I think we live in a society and in a day and age where there's a ton of materials out there. You have to really take the initiative to really spend the time and take that first step and thank you, Matt, for being on this show. Thanks for spending the time to chat with us about these important topics. And hopefully this video and the contents of it is actually beneficial and valuable to many of our young viewers out there, similar to Matt, who are interested in this, into investing and finances. And I think personally, I find Matt and his channels quite inspiring. So I think let's continue to share our ideas and exchange what we know, and of course, educate ourselves day in and day out. With that, thank you so much, Matt, for joining us on the show.
Of course. Thank you for having me, Mo.
Well, thank you so much, guys, for watching this episode of Moementum Mondays. I hope it was valuable to you and you learned something from it. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. We've added the contact link to our invited guest to the description of the video, so be sure to check them out. And lastly, if you haven't done that already, please subscribe to Moementum channel. Here on Moementum, we post weekly various videos about the stock market investing, stock analysis, financial planning, and finances. Thank you, and I hope to see you next time.